Please know that cash budget is all about cash. It's about money. It's about cash, nothing else. And it is divided into two. It is divided into receipts as well as payments. Okay. And our cash, I'm going to start with collection from debtors. You need to ask yourself, what are debtors? Who are debtors? And um, what do we expect them to do? All right. We expect our debtors to pay us back from all the sales, credit sales. We expect our debtors to pay us back whatever they owe us. Okay. You may not calculate amount to be collected from debtors using total sales. Total sales represents all the amounts, all the sales for the year, both cash and credit sales. In the first information, all these amounts here represent total sales. Um, this part here, I always deal with it every year, and I always say to my students, I can't help you with this part because this is 50% English. You just have to apply 50% English and apply grade 8 maths, and that's it. 50% English and apply grade 8 maths, and then you will understand cash budgets. And I will explain why I'm saying that. Firstly, you are told that 25% of all sales are for cash. That's English. Grade 8 maths. Only 25% are cash. How much percentage will be credit? That's it. It means that credit sales are just 75%. You just have to find your credit sales, and that's it. And then we come here. Collections are allowed 30 days credit. Debtors are allowed 30 days credit. But based on past experiences, it's expected that collections will be as follows. That's where English applies. Collection in the same month as the sale. Collection in the same month of the sale. If I sell goods in June on credit, how much of those amounts will be collected in June? It's only 20%. Credit sales for May, it is 120,000. You cannot calculate collection from debtors using total sales. You must calculate collections from debtors using credit sales. but I will continue on and on and on. It's the same thing. So I'm just going to give you examples based on those of this credit sales. 20% of those will be collected in May. That's what this sentence says. English. Same month. Credit sales for May. 20% of credit sales for May will be collected in May. Same month. 20%. And then it says collection in the month following the sale. Which month follows? Sorry, I've been saying May. 20% of sales for April will be collected in April. 20% of credit sales for April will be collected in April. Which month is after April? It is May. This sentence says collection in the month following the sale. In the month following the sale. Which month follows April? It is May. In May, we are going to collect. We are going to collect 70% of that 120. Collection in the second month after the sale. The sale was in April. Second month after the sale will be June. Meaning that in that 120, 8% will be collected in June. That's it, guys. That is it. Grade 8 maths, English. That's it. Cash budgets are not difficult at all. I always say to my students, if accounting becomes difficult, put it aside and apply common sense. If account becomes difficult, put it aside because the word accounting somehow is difficult. Just forget about accounting and just apply common sense. Ask yourself simple questions. You owe me 20,000 rand now. And I'm telling you that you will pay me 20% of that 20,000 now in this current month. How much are you going to pay me in the current month? You will pay me 4,000 rand. And then I'm telling you that you will pay me 70% of what you owe me in September. How much are you owing me? Let's start there. How much are you owing me? You are owing me 20,000. You will only pay me 70% in September. What is 70% of 20,000? 70% of 20,000 is 14,000, meaning that in September, you're going to be paying me 14,000. That was the analysis of the question. Debtors collection. For May, we've got 150. 150 are simply total sales for May. 20% of that will be collected in May. 70% of 122,000 will be collected in June. only 8% will be collected in July. I don't care about the other things. You only look at the amounts that will be collected in July, August, and September. So you just take 112,500, you multiply it by 8%. It gives you credit sales that will be collected in July, which is just 9,000. For June, total sales were 170,000. 75% of that will be credit sales. Of this credit sales, 20% will be collected in June. 70% of this credit sales will be collected in July. That's why for July we have 89,250. Of the same credit sales of 127,500, 8% will be collected in August. That's 8%. July. Credit sales for July is 135. 20% of 125 will be collected in July, and that is 27,000. Of that 135, 70% will be collected in August. That is the second month after the sale. And that will give you 94,500. Of 135,000, 8% will be collected in the second month after the sale. Remember, the month of the sale is July. This is first month after the sale. Second month after the sale is September. 8% will be collected in September. Now we are in August. Credit sales for August will be 153. 20% will be collected in August. You can't put anything after July because July has passed. And 70% of those credit sales will be collected in September. Credit sales for September is 144. 20% of 144 will be collected in the month of sale. In this case, the month of sale is September. And then you just add these up. Those will be collections from debtors. Now you go to your cash budget. Cash budget will simply have cash sales. What were your total sales for July? Total sales for July, 180. 25% of 180, 25% of 180 are cash sales. Understand, with cash sales, you sell them now, you get the money now. So in July, of that 180, 25% of that will be received in July. %20 of 180 will be 45. Take credit sales for August and multiply by them by, total sales for August, multiply them by 20%, it'll give you 51,000. Take total sales for September, multiplied by 25%, it'll give you cash sales for September. When it comes to credit sales, you go back to your debtors collection schedule. You just take your totals for July, you just put them here. That's it. The next part, it says the markup percentage is 50% on cost. To calculate cost of sales, you go back to your total sales. Cost of sales will be calculated on total sales. Cost of sales will be calculated on total sales. You simply take your total sales and you find their cost price. After finding their cost price, they said to you, it is business policy to maintain a fixed base of 160,000. Okay? Stock base of 160,000 simply means that this is the amount, the balance of your stock. Okay? Every year must be 160,000. It further says that 10% of stock is bought for cash and the rest is on credit. And then they say payment to creditors will be in the month following the purchase of stock subject to 5% discount. So of your cost of sales, only 90% will be bought on credit. The other 10% will be bought on for cash. The ones that you buy from cash, you will pay them immediately. But the ones that you bought on credit, you will pay them the month after the purchase, but you qualify for 5% discount, meaning that when you pay them, you will only pay 95% of what you owed your creditors. I started by calculating cost of sales. Cost of sales will be 100 divided by 150. This is how it works, okay? I showed you these ones will go, this cash purchases will go to July, this cash purchases will go to August, that will go to September. That is because when you buy something and you pay for cash, you will pay it immediately in that month. However, when it comes to credit purchases, June credit purchases will be paid in July. July credit purchases will be paid in August. August credit purchases will be paid in September, but you will only pay you will only pay 95%. I highlighted and emphasized following to show you that whatever you buy on credit this month will be paid next month. Whatever you buy on credit next month will be paid the following month, but you only pay 95% of that because you have a discount. Guys, this can be difficult. With ordinary shares, remember cash budget, you put anything that has to do with money. It's either money coming in or money coming out. It has nothing to do with what goes into the income statement whatsoever. This is cash budget. It's different from the income statement. It's different from the balance sheet. So here you can have your assets that are bought. You can have shares that are sold as long as they result in cash being received or cash being paid. I spoke about this, and this comes from payments to creditors. I want to show you where that 104 comes from. 20,000 of ordinary shares, we estimate that they will be sold in September. When you sell shares, you receive money, but you receive share capital. Remember, share capital is simply your number of shares issued multiplied by the share price. So when you take 20,000 rand and multiply it by 5, 20 divided by 100, it'll give you that 104. That's it. And then they talk about operating expenses. There'll be 50,000 in July, and they say they will increase by 2% per month. Come on. Meaning that in August, it'll be 50,000 times 102. And then whatever you receive there, you will increase it by 102 again. Easy. 102 comes from increase. You simply take this 2%, you add it 100%. So basically in July, our operating expenses will be 51,000. Multiply that by 102%. In September, it'll just be 52,020. Pure English, guys. Cash budgets are very, very easy. You just have to read what is given to you and then just apply it. That's it. Then they said final dividends in respect of the financial year 30 June 20.8 will be paid in July 60,000. So you go to July and put final dividends 60,000 under payments. Paid will go under payments. Amount owed to SARS. If we owe something to SARS, we have to pay it, and then under July you're gonna put in 16,000. Loan repayment of 20,000 in August. You take that 20,000, you put it under August under payments. That's it. Balance, variable balance, that will be the opening balance in July. That's it. And then for you to get a surplus for July, you take this value minus that value. If your payments are more than receipts, you'll have a deficit. Your opening balance was, because it was variable, it was 54,000 minus 64,650 plus 54,000 will give you a closing bank balance, which is that. In August, you realize that receipts are still less than payments, you'll have a deficit. This closing balance in September, in July becomes the opening balance in August, minus 900 plus minus 10,650. It gives you a negative balance. In September, your receipts are more than your payments. It's a surplus. You minus last year's closing balance, which becomes your opening balance. It gives you a closing balance for September. That is it with respect to cash budgets.